What's up, everyone? Welcome back to the Wall Street Rundown, where we break down everything you need to know about the markets today. My name is Billy. My co-host Wale with me. What's good, Wale?
What's good, man? How you doing?
I'm doing good, man. We had a mixed day today on the Wall Street. I mean, between yesterday and today, man, the market just began like if you're on the other side, you're definitely getting beat. But the S&P 500 closed essentially flat today. I mean, the Dow Jones was down like 0.7%. NASDAQ, I mean, we managed to squeeze out a small gain toward the end of the day. I mean, I think we closed at like 1 point something or something like it came back a long time, a big one. Now, even though the number is gonna look a little quiet on the surface, if you look at the intraday action, man, it was
It
all over
was
the place.
it was wild. I
It
think
was all
Micron
over the
made
place.
I think Micron made a 14% move between its low and its high
Yep.
in one
Yep.
day.
In one day. Even go look at NQ and and ES. They were down like almost 2% before the market opened, and then it just went back up.
Mhm.
IWM, same thing. If you look at all these different ETFs, so that's crazy, man. So what moved the market today? I mean, we see the Fed kind of shook them things up a little bit. I mean, the biggest catalyst today was the shifting expectation around the Federal Reserve. The comments that we heard back from the officials basically remind everyone that inflation is still kind of high. You know what I mean? So what that means is December rate cut might not actually happen. You know, and if you look at the Treasury yields, it kind of went a little bit high today. And it kind of shifted a little bit. So people are afraid. People are scared. With this whole rate not being probably not being cut in December, people were kind of factoring in the December cut too. So it's like maybe this is just an adjustment for the market. Like, hey, we factored this amount. Oh shoot, we might not get it. Let's go back to the original valuation and stuff. So
And
yeah,
that's
man.
and that's how markets work.
Yeah.
So going into November, everybody was kind of like, or I'd say probably say going into the last Fed meeting, everybody was kind of like, okay, we're guaranteed another cut in December.
Yeah.
That's what everybody was projecting. Now it's kind of like that may not happen. And when that uncertainty happens, pricing has to adjust,
Yeah.
right?
Yeah.
So I will say that you have to also keep that in mind when you think about this whole AI build out. Everybody has expectations of X. If we have expectations of Y and
Mm-hmm.
that falls short of X, stocks will have to reprice.
Facts.
So that's just what happens when either people overestimate something or things don't come into fruition as people anticipated. Now you also have to consider things like this with the AI build out. You could be anticipating X and the demand could go past that. You don't know.
You don't know. Yeah.
So that's why I keep everybody who keeps talking about this whole AI bubble, bubble, bubble stuff. I always take the headlines with a grain of salt. And we'll go into more detail about why you can't always trust headlines and you got to do your due diligence when we
Yeah.
talk about Michael Burry, but don't buy into the headlines too much. Read them, understand them, do your research, come to your own conclusions.
Facts.
That's just my 2 cents.
Facts. But I also think like, with between the Fed and the missing economic data, all of that kind of added a layer to
Correct.
how the market is moving today. You know what I mean? We haven't gotten those numbers. So people are like, we don't know what the numbers looks like. We'd rather sit on the sideline until we figure out what the numbers are like. So
Correct. Yeah. So we didn't get CPI this week. We didn't get unemployment claims. We didn't get a jobs report. And they're telling us that we're probably not going to get those numbers and we're just going to have to wait for the next one. So
which is for me is wild. You know what I mean? I mean, it almost remind me of I think Donald Trump came out and said that companies shouldn't be reporting the Q1s or the quarterly earnings
oh
anymore.
yeah,
You
yeah.
know what
They
I
said,
mean?
yeah, yeah, yeah.
I
I
mean, if
remember.
that's going to into effect, I don't know if they're going into effect because as an investor, you want to know what the company doing from one quarter to quarter. You know what I mean? I don't
Hmm.
know why the investor want to wait till the end of the year to see if the company's doing good or not. So
Correct. Yeah.
yeah, but interestingly enough, man, let's talk about this Michael Burry situation, man. So this guy, he just shut down. I don't know if he shut it down or he just kind of like decided not to be a part of that anymore. I don't know if the actual fund is shut down or he just quit the fund.
So from my understanding, let me take a step back.
Yeah.
So a couple days ago, the news reported that Michael Burry had a 912 million, sorry,
Millions. Yeah, it's
900,
millions.
$912 million short position on Planeteer.
Mm-hmm.
And then they came out, or he came out and said that that position was only about 9.2 million. There's a
Mm-hmm.
big difference between
That's
912
huge.
million and $9.2 million.
Somebody put in too many zeros. Somebody put in too many zeros. I don't know who did.
And somebody went out and put the news out there. Planeteer sold off like crazy. He already moved the market with that move.
Yeah.
And that information ended up being false.
Mm-hmm.
The position that he said that he had was the January 15th, $50 call.
Yep.
He bought about 50,000 contracts for about $184 per contract, which nets about $9.2 million.
Yep.
By the time he said he gave all the news that this was incorrect. I checked the open interest. He had sold pretty
He
much
sold
half
it.
of that position.
Yeah.
That
Yeah.
position.
Yeah.
And then on November 10th, he deregistered his hedge fund with the SEC and said he's closing it down. Now, he said big things are coming November 25th. Maybe he's opened up a new fund. I don't know.
Mm-hmm.
We'll see. But what I just want to tell people is you can't always just take what people say on the news at face value and then go running with that information. Always do your due diligence and do your research.
Mm-hmm.
So, like I said, that's a huge mistake as far as reporting is concerned. 912 million compared to 9.2. Now, I don't know when he sold and when he lost, or I don't know when he sold, but he could have made, I think, anywhere between 30 to 40%
Yep.
on that trade, just based on the movement of where that options contract went. Because if he bought it for 184, he could have sold it for around $200 a contract or like 210 a contract and made a nice profit on that, which isn't too bad on $9.2 million.
Mm-hmm.
But
Mm-hmm.
people
Mm-hmm.
were making it seem like he had this humongous short, like something catastrophic was about to happen. Like, you know what it would take for Planeteer to drop from where it's trading now to $50? Now, granted, it was an options contract that expired in 2027, if I'm not mistaken. I think it was
Right.
about
Right.
almost 2 years out. But
Yep.
I hate the fact that we live in this day and age now where people are so eager to put out information without necessarily checking all the facts and the
Facts.
boxes.
Yep.
There's a quote that I saw, shout out to Jay Williams, former Chicago Bulls point guard, on his page. He said, "A lie can spread faster than the truth can upload,"
Just. Yep.
which is
Facts.
wild.
Facts.
People will run with misinformation just to be the first one to put it out there without necessarily doing their full due diligence.
Mm-hmm. Mm-hmm.
Now, whether he gets back into the position or gets out, we don't know what's going to happen. But the news sold this information like like he spotted something catastrophic with Planeteer, and the sky was about to fall out.
Yep. Yep.
And it just ended up being possibly an opportunistic, you know, trade that he just wanted to make.
Yep. Yep. And for somebody like Michael Burry, I mean, like if you think about it, he is a well-known trader.
Mm-hmm.
You know what I mean? So people would take what he says. Most people would take what he says seriously, and the
Correct.
market will react to that. You know what I mean?
Correct.
So I think this is probably what happened. Is people reacted to that, and the market kind of sold up. But my thing is like, why are you shorting two of the biggest? I mean, I think he talked about Nvidia too, and some of the other ones that I think we went to the list last week, but on Wednesday. But you shortening like some of the big boys within this industry. You know what I mean? If you would have shown like the small quantum spaces that kind of like, still kind of trying to figure things out, I'll understand. But going after the big boys right off the bat, like that's for me, that's crazy. If it's not market manipulation, where it's like, and plus the reasons he gave, yeah, it was more of accounting reasons rather than the structure or the fundamental behind AI. It was more like accounting, reporting, and all this stuff. So
Correct. He's I mean, I'll be honest with you. To come out and say that a company like Nvidia, Meta, Google are committing fraud, that's a huge claim. Like that's a huge claim. And if you're going to claim fraud on some of the biggest companies in the world, you better have the proof to back it up.
yep.
And what he mentioned in his letter about closing his fund, he was kind of saying that the way he reads capital markets is out of touch with what capital markets trade like today. Because I've been in the investment industry for a long time, and one area of investors that have struggled over the last, call it 10 years, are value investors.
Mm-hmm.
Value investing is kind of like, I would say, like the backbone of what you're taught over the course of time as an advisor. Now we've got companies like Nvidia, we've got Google's, we've got Apple's, where even at 1 trillion, $2 trillion valuations that look expensive on paper, people are still buying,
Yep.
and these companies are still growing.
Growing.
Like if you go
Facts.
back to what you're taught about like PE and discount, discount cash flow pricing as far as what a stock is valued, all of these companies would be looked at as overvalued.
Yep. Facts.
And people would be like, yeah, I'm not paying this price for this stock. But we have seen these companies continue to grow. A company like Planeteer, going from where it's gone from in the last couple of months, a value investor is not touching that
It's not touching
because
it. Nope.
they're thinking it's overvalued.
Yep.
And
Yep.
then sometimes you get people who try to short these stocks and it doesn't work out. Tesla was a prime example back in the day when they were
Oh
growing. Everybody
man.
kept saying overvalued, overvalued, overvalued. Some people were trying to short that thing like crazy and they got burned.
They got burned pretty bad. I know a few people.
Yeah, they got burned big time.
Mm-hmm.
So now that we have a new kind of, I wouldn't say it's a new philosophy, but people are willing to pay premium prices now for growth companies. That's just the environment that we're in.
Yep. Yep. Yep.
You know, Nvidia doesn't go from 2 trillion to 5 trillion if people aren't paying a premium price for that stock. 10, 15, 20 years ago, nobody would be touching these stocks
Right.
because of where their PE ratios were based on their discounted cash flow model and whatever it is you want to call it. If you're still using those types of models, you may be out of touch.
Yeah. Yeah. I
So,
agree.
and I'm
I
not
agree.
saying that value investors can't make money and can't do well. Warren Buffett has done pretty well as a value investor. But I would say that growth investors, if you haven't been invested in growth, you have outperformed the market big time,
Mm-hmm.
like big time. You
Mm-hmm.
can go look at the difference between SPYV, which is the SPY value index. I kind of use that as a proxy versus SPYG, the growth index, and compare the performance over the last 10 years. You have been left behind if you've been a
Yep.
value investor. You've made
Yep.
money, but you've been left behind. And the difference in margin is
It's
huge.
crazy. Yeah.
So, I just like I said, I understand that headlines is what attracts people, but always remember to do your due diligence and do your research.
Yep.
Because if you take information at face value, you might be fed misinformation.
You might miss
Or
some
you might
good
miss
good
some.
good stocks. Yeah.
Yeah, you might miss some good stock. So,
Yep.
like I said, to everybody has their own investment philosophy. I'm not going to sit here and say that some of these, growth stocks are not expensive, but just because they're expensive doesn't necessarily mean you don't buy them, in my
Right.
opinion.
Right. And I think you also got to take into account a lot of those growth stocks are stocks that are like mostly in like technology. And we know
Hmm.
technology changes so rapidly, you know what I
Correct.
mean? And so it's like if you don't if you're thinking about value, you're trying to find a company that's maybe being overlooked or people if you wouldn't think about Tesla, you wouldn't
Mm.
think about Nvidia, you wouldn't think about some of those companies because those companies as a growth company back in the day, you wouldn't think about them as like these are going to be $1 trillion companies right now because technically they were losing money in their early stages, right?
Hmm.
So now it's like I think value investing is great if you're looking for a specific sector.
Mm.
In my opinion, like you got to look for a specific, maybe not a technology sector. Maybe you could find some stuff in the technology sector that's still value. People have no idea. For example, in not quantum spaces, like I think some of those might have some value in there, but you got to do a little more due diligence in there too.
And you got to be
But
willing to wait.
you got to be willing to wait. That's another thing with value investing. It's not going to pay off in the next 2, 3, 4, 5 years. It might take a lot longer. You know what I mean?
Hmm.
And your research is a lot. deeper, is a lot longer, is a lot more um involved, I guess, when it comes to like doing value investing and all this stuff. But again, growth investing is like you will miss kind of what I say, you will miss some of the biggest names because you're focusing on it's too high, it's too expensive, all of that stuff. You know what I mean? People have been saying Nvidia was too expensive when, I mean, before the split, I think they were like what, when they did that crazy run, oh, it's too expensive. 2 months later, oh, it's too expensive. 3 months later, too expensive. Now it's like, we're like way, way up there right now. You know what I mean? We went down to like $90 or $80, and now we like doubled that in less than a year. Again, at every stage, there are people who said it was too expensive, but yet here we are. So you gotta follow the money, man. You gotta follow the money if you really want to be able to make money in this stock market.
And there are some people that are just strictly like they're just again, they stick to value or they want to buy, they don't want to pay they want to buy they want to buy growth stocks at good price rather than growth stocks at any price.
Yeah.
For example, if you look, I mean, again, Warren Buffett never bought Nvidia. Warren Buffett never bought Planeteer. Warren Buffett never touched Tesla. Warren
Mm-hmm.
Buffett never touched AMD. So based on his metrics of how he measures growth companies and what he would purchase for growth, it seems like Apple was the only company that fit that bill, and he
Yep.
stuck with it,
Yep. Yep.
which seemed to be a good investment. Now, again, he could have bought Nvidia. He could have bought, Tesla. He could have bought Planeteer. He could have bought all of these other hyper growth companies that have gone, have grown astronomically. I think another growth company he might have also owned was Amazon. I want to say he did own Amazon at one point, if I'm not mistaken.
Mm.
And he might still own some of Amazon. So Warren Buffett's philosophy is like, okay, I'm going to pay for growth, but I want to pay for growth at a certain price. I don't want to just pay any
Yep.
price.
Yep.
Which I think, okay, it's not a bad philosophy, but had he had Nvidia or Planeteer in his portfolio, it would have done good. But he stuck to what he believed in, right?
Right. Right.
So, and there's nothing wrong with that. But if you're a value investor and you're just looking at like energy, if you're just looking at financials, if you're just looking at consumer
Consumer
staples and those
staples.
and those sort of value plays, you have missed out. Now, the only one value play that has now been trading like a growth stock now is utilities.
Yep.
Utilities have started to move. So maybe value investors are starting to get a little bit of catch up if they're invested in the utility sector.
Utilities. Yep.
But, like I said, to me, growth investing when you're young is to me, that's where you want to capture the most growth. When you're younger and when you have a long-term time horizon, you want to be as much growth oriented as you want. So,
Facts.
yeah. Another thing I will also say that growth has outperformed values because if you look at the last 10 years, borrowing money has been cheap.
Mm-hmm.
Like ever since the financial crisis since 2008, borrowing money has been pretty cheap,
Yeah.
and
Yeah.
now that we've got kind of normal interest rate environment, I think things are, I wouldn't say they're leveling off, but value has maybe caught up a little bit. But growth to me is still the dominant performer over the last decade,
Facts.
easily.
Yep. Yep. Speaking of Buffett, man, we just saw that actually he might, he jumped into Google now. So
Hmm.
again, he handed the baton, right? So
Yep,
maybe whoever is running that now with all the teams that are running that now, then maybe they're starting to see, okay, now if we really want to grow this fund to be at another level, we need to start looking at some major companies, right? So
correct.
I think you just added Google to their list also. So let's talk about that, man. I feel like again, with every new era comes a new way of thinking, comes a new way of technology. I mean, not
Correct.
technology, but it's come a new way of investing. So are they deviating from value investing? I don't think so, but I think now they're taking into account like maybe we need to start spending and investing in those major big companies also. So I wonder why they chose Google over like maybe like Palantir or even Nvidia, but it's very interesting to me that I actually start investing in some of those big companies.
I don't think a Warren Buffett will ever touch a company like Palantir just
Nope.
based on that PE. That PE is crazy. Like it is ridiculous. So I don't think that he would ever touch a company like that. Now, I will be really interested to see because this is the first major purchase of a growth company that we haven't seen with Berkshire, I think since Apple. Like
Hmm.
Apple might have been the
Apple was the
last.
biggest one,
And
yeah.
even when Apple was bought by them, this was years ago before they had this hyper growth phase. So there is something in, and I would not be surprised if Google has a huge gap up on Monday because of this news, right?
Yep.
So they saw something in Google that now fit their bill. Now, I
Yep.
will say this. I don't know if they've changed their core philosophy of what has changed in what they feel comfortable with buying as far as stocks are concerned, right? But there might be just a drift. Maybe they're saying, okay, maybe we want to increase our PE ratios a little bit for tech companies.
Yep. Yep.
Maybe
Yep.
we want to value these bigger companies a little bit differently than we've done in the past, which is why now Google kind of got the green light to make a purchase. I think it was
Yep.
$4.3 billion stake in Google.
Hmm.
So we'll see how it plays out. Like I said, I can't remember the last time that he made a big purchase in a growth company. Like I really feel like Apple was the last one that he made. But um, if everybody believes that, and I will say this too, even smart people get it wrong. So we
Let's
don't
get that. Yeah.
we don't always know how this is going to turn out. Even
Hmm.
smart people, because if you look at Michael Burry's history, Michael Burry has been ever like he's made a lot of calls that have been completely wrong,
Yep.
like completely wrong. He has done it multiple times, but the one time he got it right, he got it really right. So that's
You
the
got
one
it
that stands
really,
out.
and he had to wait years for that one too. It wasn't
Yeah,
like overnight.
it didn't happen right away.
Yep.
So we'll see how and this is another thing that I feel. If there was an AI bubble, I don't feel like a team like Warren Buffett would be buying Google because they're
No.
at the center
No.
of it as
No.
well.
Yep.
So, and I think they trimmed their Apple position. So their Apple position had got trimmed.
Yep. They trimmed
Um,
it too. So I'll be curious to see how Apple actually move after this trimming.
mhm,
And
yeah.
again, man, I am so disappointed in Apple. It's not even funny. Like, you know what I mean? Like, I don't know what are we waiting for. Tim Cook maybe needs to retire. They need to find somebody else who's able to make this a growth company again. Because right now it's just
Yeah,
stagnant,
they're not
man.
they have a growth valuation, but they haven't. And I'll be honest with you. Like I said, from a technology standpoint, I just don't see them doing anything that really moves the needle outside of selling phones.
Yeah.
They did hit an all-time high. I just don't know what is it going to take for them to keep climbing at this rate. I don't know
Yeah.
what it is.
Yeah. Yeah.
So we'll see.
Yeah. I'll be curious too, man, because I am kind of like disappointed in how Tim is running stuff. I mean, they got tons of money. I mean, he's not doing a bad job. They
Hmm.
got tons of money. They're just sitting on. You know what I mean? So I hope they have some type of R&D going on to figure out how, and they can get their foot into this whole AI move and stuff. So we shall see, man. And hopefully somebody smart is thinking about that.
Yeah, because like I said, I still don't I don't know. I don't not that I don't believe in Apple. I would rather just be in other places as far
Yeah.
as investing in growth.
Yep.
Like
Yep.
to
Yep.
me, Apple is kind of turning into a value play, in my personal opinion. That's what it's looking like to me.
Yep.
You
Yep.
know,
Yep.
I don't know if it deserves to be traded and treated like a growth company, but we'll just
Sorry,
have to
Apple.
wait. We'll just have to wait and see, man. But yeah,
Sorry, Apple.
the one thing I will say though is that a lot of the headlines that you're reading today are putting a very bad light on the AI growth right now, as far as people saying that they're committing fraud, they're overstating the numbers, they are doing blah, 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 blah. And I'm not saying that these aren't true, but we just don't know. Only time
Yeah.
will tell.
Only time will tell.
Only time will tell. And because there's so many companies involved in this whole ecosystem, are all of them really committing fraud?
Mm. Oh, that would
That's
be a big
that's a real big bold claim that all of these companies are just passing around the same
the same
money
money.
in around each other.
I thought that
Like,
was interesting when I said that post. I was like,
yeah, I saw that. Like
okay, that's kind of interesting.
someone saying that Nvidia told OpenAI, we're going to give you $100 billion. Then all OpenAI is going to do is just take that same $100 billion, give it back to Nvidia, and then call it a sale.
Yeah.
Like, if
I,
that's what's really going on,
we messed up.
that's fraud.
That would be messed up.
Like that's fraud. Like if
Yeah.
that's what's really going on, that's fraud. I just don't see a guy like Jensen Wong really putting his entire like career on the line
On that.
for something like that. Like I
Yeah.
just can't see it. Now I
Yeah.
don't know Jensen Wong personally, so I can't. I don't know what he's capable of doing.
Yeah.
But when
Yeah.
I look at where he came from and where he got to throw that all away fraudulently, just that's a hard claim, man. That's a hard claim. I'm not saying it can't happen
Right.
because
Right.
we've seen some people do some crazy things in the past. Let's
Yep.
be so
Yep.
and
Yep.
I don't know what's going on behind the scenes, but I don't know. It's a hard thing for me to just believe at face value.
Yeah. Yeah.
It
Yeah.
is.
But again, like you said, like whenever we start seeing like these headlines about AI being overvalued, AI being fraud and all this stuff, for me, it's all, especially if it's like coming from major newspapers or major publications, for me, it's like it's almost like they are trying to deter you from investing in it. You know what I mean? So it's like
Mm,
because there's no way. I keep going. I keep talking about Jamie Dimon all the time. Jamie always comes up and says, "This guy's about to fall off. The economy is about to go to shit." And at the same time, he's buying. Or the economy is doing really great. Everything's great, but at the same time, he's selling. So it's like, you know what I mean? So it's like you have to look beyond the headline. You really have to look beyond the headline because ain't nobody in this financial world that's gonna come out and tell you go buy this stock right now
dang,
just
isn't
for you to do it.
wasn't Jamie Dimon the same one who was talking about how bad crypto was, and now
Yes, and
they're
now they
investing?
own like tons of crypto. Do you understand what I'm saying? So it's like that whole time they're probably telling you like it's bad, it's bad. They're buying it. They're becoming one of the major players. You know what I mean? So again, just be very mindful when people are getting on this news publications or news station, MSNBC, and all these different things. Be very careful, man, because at sometimes a lot of times it's an old news. Whatever
Mm-hmm.
they're telling you is old news. It's already gone. They already positioned themselves. They're ready for you to make the move. You got to think about it. The stock market is just being moving money around. Like there's like it's just moving money around. That's it. But looking at next week, man, major catalyst. Nvidia is on the stage. Everybody is waiting for Nvidia to see exactly how the earning is going to look like. That's going to be the determinant of how AI is actually going to
And I think
move.
that that's probably why the market has kind of been moving
Yep,
sideways.
yep,
Yeah,
yep.
I
So the
think everybody's
markets
waiting for that.
the market we've been playing close attention to the revenue, the EPS, especially the forward guidance. Like I think that's usually what brings down the market. If everything looks good, but the guidance is horrible, the market don't care. We're just gonna go whatever the guidance is telling us. So again, we are gonna keep an eye on it because if Nvidia beats and the issue of strong guidance, I think we're gonna see a lot of those tech AI stock rally back up. But if it disappoints, we're probably going to see a major correction in the tech. You know what I mean? So we shall see. We shall see how the numbers looks like.
And I will put this out there from an investing standpoint is that we have to be very honest with ourselves that not every company that is in this AI ecosystem is going to make it.
Nope.
Like let's be real.
Nope.
Not everybody's going to make it. Like you remember what happened with the SPAC,
Yeah.
ordeal,
Yeah. Yeah. Yeah.
There's a lot of companies that went public during that whole SPAC thing and they just fell flat on their face.
Mm-hmm.
But I will say that if you look at the core businesses and the core companies that are involved in this build out, to me, I think you'll be in a good space. Again, we don't know this is another thing. We still don't know where the demand can reach. Because my thing is this is how I look at it. If someone says AI is going to grow or the AI build out is going to be a $1 trillion opportunity over the next 5 years, and let's just say that we don't hit it in the next 5 years. Let's say it takes 6 years or 7 years or maybe even 8 years. Does that necessarily make it a bad long-term investment? And to me, the answer is no, because the growth is still there, but the pace of the growth might be off. You might have
Yep.
overestimated that.
Yep. Yep.
Fine.
Yep.
The way I look at it is I might be early, but I wasn't wrong.
Exactly.
That's how I would look at it.
Yep. Yep.
So to me, again, if you are looking from an investment standpoint, you always want to be involved in the companies that are reshaping how we live our lives and are doing things to make things more convenient for people. Now, what you pay for those companies, that will vary from time to time. But to me, someone who is dollar cost averaging and not putting all their entire capital thinking they're going to time the bottom, over the course of time, you'll probably buy things at a fairly good price. And if you stay invested and these companies continue to deliver, to me, I think you have a way better chance of doing well rather than kind of just saying, oh, I heard that AI is, you know, overpriced. I'm not going to get in. I'm not going to invest.
Exactly. Exactly.
Like the potential for what the future looks like with AI, we don't know what that is. Because if I would have told you 20 years ago when the internet came out that I would have my entire life on a phone where I could move money, where I could buy items and get them the next day, where I could stream music unlimitedly, you probably would have been like, huh?
That would sound like a foreign thing.
That sounds like a foreign thing. You
Mm-hmm.
and all we had back then was just email and dial
Yep.
up.
Yep. Yep.
If you would have told me 20 years from now that this is what the internet would be able to do, we'd be able to have video conferencing, right? In HD.
In HD. Yeah.
20 years ago, you've been looking at that like, what the heck?
Yeah. What are you talking about?
What are you talking about?
It only happens in the movie, in sci-fi movies.
Exactly. But look at where we are now 20 years later.
That's crazy.
So that's the way I look at AI. Could people be very ambitious as far as how soon we get to certain
Oh,
destinations?
absolutely.
Absolutely.
Yep. Yep.
But it doesn't mean we won't get there. So
Yep. Yep.
that's how I look at it.
Yep. I
Yeah.
talked to so we at my job we do this AI kind of like breakfast, whatever they call them, like lunching, whatever.
Mm-hmm.
And every single machine learning person that like does machine learning or AI prompts and all these different things, they're all saying like we literally in the beginning of the AI revolution. And they all compared to the kind of like what you just said, they were all compared to the internet. Like when the internet first came out, nobody knew what the heck to do with it. Like we didn't even know we can do all of those things on top of the internet. Nobody knew that. But as demands, as ideas start coming, as use cases start being producing themselves that you can solve with AI, guess what? I mean, with internet, guess what? All of these things just start coming out. You know what I mean? Like all of those things. Instead of you being confined in your home next to a dial-up phone where nobody can use the phone because you're on the internet. Some of you probably have no idea what I'm talking about. Now you can walk around, no wires, nothing is touching you, and be able to use the internet wherever you are. Now imagine how crazy that is. You know what I mean? Funny thing, I was trying to explain to my kids about CDs and DVDs. I had the hardest time to explain to them that this little disc thingy was able to produce sound and videos, and you put it in this thing called DVD. What's a DVD player? Okay, let's talk about VHS. What the hell is a VHS, Dad? Oh, this thing has like a tape inside of it. Like, it's crazy how fast technology have moved in the past 10, 20 years.
Correct.
Think about it. I mean, the DVD era didn't last that long. You know what I mean? I feel like we went straight from DVD to streaming. Like we didn't even spend. I don't think it even lasts 10 years. I don't know. I don't know how long it lasted. I really don't know. I feel like we just like DVD short time and then next disappeared.
And now you can get cable over the internet.
Over the internet.
Like
you don't need to go. Yeah, you don't need to call nobody. Nobody have to run a wires to your house.
You had to get a satellite dish, or you had to call Comcast or tell a cable company to come run a wire to your house.
Yep.
Now you go on YouTube TV or Hulu Live TV, sign up, and next thing you got live TV.
It's right there.
It's right there.
Yeah. So imagine all of those things that we didn't think about that was possible. What more can be possible with AI? You know what I mean? Like just think about it. And then you add quantum computing on top of that. You add all these different technologies will be able to be built on top of the AI, chips and all of that stuff. So again, man, like I think in the short term we might see like some crazy movement in some of those stocks, a long term, man, like I think we all can see clearly what the world is heading to. So
Yeah. So like I said, do people overshoot what is possible or when things will happen? Yes.
absolutely, yeah.
But that doesn't mean that they won't happen.
Mhm.
So, which is why I keep saying if this whole thing, I wouldn't necessarily say blows up, but let's just say there's a catastrophic pullback for whatever reason, and we have a catastrophic, does that mean that um, Nvidia is a bad buy or Google is a bad buy, or Microsoft is a bad buy? To me, the answer is no.
Mhm.
The answer is no. I think what will happen is if there is a miscalculation, they will sit down and be like, okay, what is the actual need? What is the actual demand? And they'll recalculate and recalibrate. Like that's just what happens when you overshoot things. You just have to recalibrate and readjust things,
Yep,
right?
pretty much.
So the technology to me is feasible. And as someone who works with it on a daily basis, like training AI, the potential to me is limitless
Yep,
for now.
yep.
Like I don't see what this thing can't do from a calculation and reason standpoint. Like I just built, I didn't say I built, but I put in a prompt into my chat GPT and I tell it, when I ask you a question, I want you to be 100% unfiltered, 100% no, like, don't BS me. Give me the raw truth on every topic
Yep.
that I am asking about. And I asked it to build me a portfolio of something. And I asked it, how feasible is this return on a consistent basis? You know what it did? It basically recalibrated everything for me. And it says, this should be your base. This is your worst case scenario. And this is your best case scenario. But if you're going to advertise this portfolio, this is probably a safe place where you would say this is what is achievable consistently. I
That's
was like,
crazy. That's crazy. That's
what?
crazy. That's crazy.
So this build out to me, again, it's happening. The question is, do you want to be left behind or are you going to enjoy the ride? And it could be a long ride and it could be a bumpy ride. But if you look back, I'd say 5, 6, 7, 8 years from now and where we're going to be, I think the technology will have revolutionized how we think and how we act and how things get done. The efficiencies to me are crazy. AI is getting all the headline, but to me, I keep telling you, if we want to talk about cracks and bubbles, I wouldn't say bubbles, but cracks, private credit makes me more nervous
Yeah.
than AI.
Yep.
There was just another bankruptcy that BlackRock reported for private credit for a company that they lended private credit to. I wouldn't say it's a catastrophic bankruptcy, but it was about $150 million that went belly up, and they got to write that loss off. I'd
Mm-hmm.
be more worried about private credit than I would be about AI. That's just my 2 cents, though. I don't know what's going to happen, but I have been tracking bankruptcies in the private credit market as of recently. And let me pull my list up real quick and see how many I got now. Let me see. Where's my list?
You just keep growing.
Yeah, where's my list? And this is in the last 12 months. So I'm going to give you some names of some companies in the private credit market that kind of have had some troubles. We've got Chapter 7 bankruptcies and we've got Chapter 11. The most recent one I saw was Renovo Home Partners. That was in November. First Brands Group was in October. That was a Chapter 11 bankruptcy. We don't know what those losses will be, but the reported debt on their books was between 9 to 12 billion. Tricolor Holdings was in September 2025. That was a Chapter 7 bankruptcy. We've got PrimaLend, October 2025. That was a Chapter 11 bankruptcy. We've got At Home Group in June of 2025. That was a Chapter 11 bankruptcy. We've got Morelli in June 2025. That was another Chapter 11 bankruptcy. Everstream Solutions in May 2025. That was a Chapter 11 bankruptcy. and Global Clean Energy / Bakersfield Renewable Fuels in April 2025. That was a Chapter 11 bankruptcy. So that is 8 names in the last 12 months of bankruptcies in the private credit market. I don't know how it's personally affecting the bottom line or how it's affecting the entire sector, but all I will say is that this is something you can't just sweep under the rug. So whether that turns into something bigger or worse, I can't call it. I don't know. Only time will tell. But there are, I guess Jamie Dimon calls them what, cockroaches that keep showing up.
That keeps showing up.
So, we'll see we'll see what happens. But that to me is the real story. If anybody is worried about anything, it's what's going on in the private credit market. And go look at how fast the private credit market has grown in the last 5 years. Go look at that. And the thing about the private credit market is, in order for investors to get their money from these companies have to have the cash flow to produce it.
Produce it. Yep.
And the yields on these cash flows, people are talking about 8 to 12% returns on these credit instruments, which is way higher than your junk bonds that are out there, right? Than your high yield credit in the public markets. So do the math. I mean, that's how I look at it. Do the math.
Do the
Because
math.
I don't know. That worries me a little bit. I don't know if anything bad is going to happen that's going to blow up the economy. Don't call me. I don't know. But I would be paying attention as these bankruptcies keep
Yep.
showing up. Yeah.
Yep.
So
Yep. Yep. Absolutely. And I think again, not a lot of people talking about it just yet. I don't see it. I don't see it hitting the news and stuff. So maybe here and there, but it's like overall, you don't hear people talking about it in the news just yet.
hmm
So
yeah. First Brands, they talked about First Brands. A couple of these names they've talked
yeah,
about. But this Renovo Homes, this $150 million bankruptcy, nobody said nothing about that. I had to dig for that information.
they're
You
quiet
know,
about it.
yeah. You don't see that on a major headline. I think I find that on Financial Advisor news. So, but I'm telling people, pay attention to the private credit market, man, because like I said, I'm I'm a little worried about what's going on there because of all those names that I just gave you of those bankruptcies. How many of those names did you hear in the last 12 months that made the headlines?
Yeah.
I think First Brands might have been the only one that made big headlines. All the
Yeah.
other ones, I don't think anybody was talking about
Nobody
that.
nobody knows about it. Nobody knows anything about it.
Just got swept under the rug.
That is nuts.
So
That is nuts. So something's definitely brewing in there.
yeah, I just
Maybe.
don't know what it is. I don't know what
Yep.
it is. I
Yep.
just know that there's smoke.
And where there's smoke, there's fire. So,
Just yeah. So
man, but this week next week economic calendar, man, we don't have a lot, but I feel like any number that comes out next week, I think the fact that we didn't get all the numbers this week, I feel like any number that comes out next week is gonna ruffle some feathers a little bit, because we really haven't seen any numbers come out at all this week. I mean, the most important one that I'm seeing is we have the employment report, unemployment rate, the initial jobless claim. That's all on Thursday, November 20th. Um, I'm trying to see what else is big on here that's coming up. We have the PMI, consumer sentiment. I mean, the import price index, we have that coming out. So we'll see how that looks like. Industrial production, to see how that looks. Home builder confidence. Oh, business inventory is actually on here also. So we'll see where people are.
I'll also say next week we got a couple of retail earnings that are coming out. So I know
Yeah.
we've got Walmart. I know we got Target.
Walmart got smacked today too. It's crazy.
Yeah, I think CEO stepping down. So
Mm-hmm.
they're bringing in a new CEO. But Target will be real interesting to see what Target says on their earnings report as far as maybe being
New
able to
CEO.
turn that ship
Get a new
around.
CEO. Get a new CEO. That's the only thing that's gonna save him at this point.
Well, they got a new guy, but he's internal. So
No, they need a whole new CEO. Like, not from inside the company. Like, you know what I mean?
yeah,
But
we'll see what happens.
yeah, but overall, man, I think we covered a lot today. I don't see any crazy um reports that's going to come out, except for the earnings that we like. Nvidia is definitely going to be on watch for everybody, even if people are not trading it. They're just going to make sure to see how the numbers looks like.
Hmm.
So again, just keep an eye on that one. Any last minute words you want to give to the people out here? I know we gave a lot today, but any last minute words?
Nah, the only thing I will say, like I said, the headlines, people give you headlines to sell news. But to me, I will keep saying this: pay attention to what's happening in private credit. Well, also, and we've been saying this for a long time, even though nothing has really, how should I put it? Nothing catastrophic has happened, but
Mhm.
the commercial real estate market, we've seen the earnings reports from some of those regional banks in this last past quarter weren't so good. And commercial real estate was one of the drivers of that. So we'll just have to wait and see what happens. If something bigger comes of it or not, we'll just, again, only time will tell. So we'll give time its chance to play things out.
Yep. Well, with that being said, hey, thank you all for tuning in to the Wall Street Rundown. I'm Billy, and as always, joined by my co-host Wale. If today's breakdown brought you some value, please make sure you follow and show the show and share with everyone else that needs to be able to be in here also. Well, until next time, we'll be back for more insight on Wednesday. But until then, stay sharp, stay ready, stay in the market, and stay informed.